Hey, good day, bro. How are you? Are you good? So I would be taking questions and answers based on ICC. Um, yeah. So before we start, we're gonna be on the Hasso University. I'm gonna be doing a 5 day series, the ICC Masterclass, and this is the days that you're gonna be covering everything that you need to know about ICC. We're gonna be in the House University mentorship. I'm gonna be dropping down. This I wouldn't say it's a course. I'm just gonna try to get everybody on the same page. We do have, however, we do have ICC mastery license. You know, yeah. So it's not really a course, but it's a 5 day series that we're gonna be doing in the House University mentorship. So if you wanna be involved, yeah, hit me up, man. Get there and then hit me up. And then we can take it from there. So that's if you're interested in ICC, right? And there's gonna be other concepts that I will also be covering. Um, yeah, pretty much. So day one, we're gonna be, covering ICC in terms of the indication. I'm gonna be explaining it in a more visual way where more people can understand it so it can sink into their brain. Indication or expansion or breakout, whatever the case may be. Correction, you can call it the retracement or probably a reversal. And then continuation also can be also a reversal depending on the time frame. And then support and resistance, which is basically buyers and sellers, right? So we also have ICC ranges, right? I'm talking, 1 hour, 4 hour, understanding, how to actually go about them and also how you can use all of them so you can get to a certain point. But either way, you still want to be, whether you swing trading into trading or scalping, you still want to be starting from the higher time frame. So I'm going to be getting into that. The models in terms of, the psi entry, the one that you all know, the one is to one entry, and then the megastructure correlation entry. So I'm gonna be doing a full breakdown in these 5 videos that I'm gonna be live classes, actually not videos, live class I'm gonna be doing with the Hasi University mentorship members. And then we're gonna be also covering risk reward and position sizing. Most people I think also this part over here it actually affects them. And then the trading plan and the psychology part of it, how to formulate a plan and how to stick to your plan. You get what I'm saying? These are all of these things will be covered um, on the 5 day series, which is gonna be starting next week on the Hasi University. This one, so we have the Hasi University members over here. Yeah, over 60 members. So that's what we're gonna be covering. But overall, if you have any questions, earlier on we did have let me see, yeah, earlier on we did have we did have a session. I did a session based on a concept on liquidity grabs and how to trade liquidity grabs, right? So this is similar to what we call the, I don't know how many of you, I'm good, mate, I'm good, and I hope you're good too. All right, so this is similar to some people, if you're familiar with the Quasimodo model, right? So this is familiar with the Quasimodo model. We have a high, we have a low, we have a higher high, right? In Quasimodo, you have a high, you have a low, you have a higher high. You buy at the previous highs, price to settle downside. Once price gets to these lows, you start, your TP will be here, your stop loss will be there, right? So and then after price creates a lower low, once price buys from this area, you buy from there, you go to the upside. Remember, you sell from here, you buy from here. These are your will always be your entries and your your TPs, right? So these the higher highs and the lower lows would always be your stop losses, right? That's similar model to the what is this, the quasi model. And this liquidity model that you see in front of you is similar to the quasi model, right? But all in all, I did do a breakdown on it today on the previous live that we did, and I showed you guys in terms of how to go about it. What you want to see, this one is based off a reversal. Uh, Price has been making lower lows and lower highs to the downside, and from the 4 hour we know that price is bearish, right? From the 4 hour we know the price is bearish. And then also in the 1 hour, we can clearly see price has been making those lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, and then price breaks the lower highs, right? Price gives us an indication to the upside, or gives us a break to the market structure shift to the upside. Price comes, sweeps the liquidity down below, right? And all of these things are happening on the 1 hour, right? So as you can see, price wicks that close back into this range, right? Price closed back into the range, right? And then because most people would realize that this is a liquidity sweep, so what do the makers do? They introduce the second liquidity sweep for on the sell side because of the buyers which are coming in exactly at this area. I did explain it earlier also in terms of, how most people end up getting caught because what you've been taught with those who know the title soup, you taught that, whenever I think price sweeps below this area and then returns back. This is where you must start looking for opportunities, market structure shifts, which will be happening here. There will be some sort of a fair value gap here, whatever the optimal trading into, whatever the case may be, and you can take price to the upside. So what do the market makers do? The market makers instead they introduce a second sweep to trap in the first in buyers which got in, they trap them and then take them out. Because the first sweep happened from this low to this area over here. That's the first liquidity grab, right? So buyers will get in at this area, trying to push price back to this liquidity pool to the upside, where we're looking to take price to the upside, right? This would be the next liquidity pool, which will be waiting for price, right? So people will liquidity buyers, what they are told is this is the turtle soup. Whenever price does this, or they can be an SFP, swing failure pattern, right? Which would mean price will come and sweep liquidity and then fail to continue and then go to the upside, right? So they get taken out, they take out the first pool of liquidity, buyers jump in immediately, right? So what they do is now they take out the second pool of liquidity, and now you're gonna have price doing all sort of market structures that you'll be able to see, right? So you'll get price preview a market structure shift from the first high of the first pool to the downside. You wanna see price give you a market structure shift. You get what I'm saying, right? And then obviously with that being said, price will then sort of give you a high, come back and correct this on the 15 minute, and then obviously from there price will then look to go to the upside. You get what I'm saying? For this liquidity pool right here, right? So in terms of entries, I did highlight that in terms of entries, we have three entry models also in terms of how you can approach this model, right? So with that being said, the first one, you pull your box equilibrium, or the 50% of that box would then be your entry point, right? So you would be looking to take those buying opportunities from here, stop loss below here, and then obviously looking to take price to the upside. You know what I'm saying? That's trade number one. Trade number two would be the optimum trading entry. If you are not, if you're not familiar with the optimum trading entry actually would be this is the Fibonacci retracement. The, the optimum trading entry is between the 0.70 and the 0.79. Get what I'm saying? So that's where price is will look to continue. And because we go into the upside, we pull the Fibonacci from the downside to the upside. So as you can see, price came in with here, and then you can look to take price to the upside. Stop loss also still below the lower lows of the second liquidity, and then looking to take price to the upside. You get what I'm saying? Similar thing would happen in a different story, similar entry, or even with the equilibrium, the 50%, you can still use the Fibonacci, right? So a similar thing will also happen in terms of what is this? When you drop down to the 5 minutes, you would realize after the second sweep and the market shift that happened in this area over here, you'll find out price did give you a fair value gap. So a fair value gap would be somewhere around this area over here, right? So that fair value gap um, would be somewhere in that area. So also that can be one of the entries that you might be looking for. You get what I'm saying? So obviously looking to take price where to the upside. You get what I'm saying? So these are some of the things that you can be able to understand in terms of getting into this model that I did talk about on our live session earlier during the day today, which ended up unfolding. As you can see, we did have that model unfold. There we have the optimum trading entry. Then we had the equilibrium, the 50%, whether you can use the Fibonacci or the your rectangular box drawing. It's all up to you, right? So then we had price eventually going to the upside, and then your first target can be these highs over here, and then your second target can be these highs over here. This next liquidity pool to the upside. Whether you want to continue holding the trade, I don't support it, but for me, if you want to leave a runner, you can do that. But still, in terms of whatever, in most cases, you'll find out that the equilibrium, it is where the trade will always hit for to go, but not the fair value gap or the optimal trading entry. It will not go there in most cases. You get what I'm saying? So does that on these analysis that I did, right? So now we can talk about ICC. Let's talk ICC now, guys. Give me questions. Give me questions, guys. Give me questions. What do you want to know? What are you struggling with? What can I help you with? What do you want to know about ICC? What are you struggling with? Put your question in the chat there on the left chat. Talk to me, chat. Talk to me. What do you want to know? What do you want to know about ICC? What are you struggling with? Oh, I had one of the guys. They had a problem with understanding a range, and the market structure on a range on a 15-minute, right? Let's say price is coming from the downside, right? Price is creating, you know, price creates a lower low, creates a lower high, goes to the downside, right? Kind of builds up something like this on the 50, the same very same 15-minute, right? And then goes to the downside, right? Does the same thing, you know, on the 15 and then goes to the downside. Remember, all in all of this that you're seeing happening, when we talk about a range, we talk about a point where we had a breakout, a swing point where we had a breakout, and a retest, and then price continued. So we had this breakout from here. Price broke from this level to the downside, which ended up being the indication with an expansion to the downside, right? Price went up to correct, but with this correction that was happening, price had made these moves on the same time frame. So most people end up getting caught because they thinking, but oh, now this is what's happening. No, the next range would be between the lower high that would be created, which should be this, and then previous lower low, which should be this area. This is the new range. The move, whatever that was happening in between, is not gonna be important unless you drop down to a smaller time frame. You get what I'm saying? Similar thing with the next breakout. We have a breakout, price goes, creates a maybe a lower high at some point, right? Creates a lower high at some point, probably this area over here, right? We only gonna get a new range if price breaks this lower low, this previous indication lower low. That's when we get a new range, right? But let's say price doesn't go all the way, it doesn't break below here, and then instead price does this, right? Instead price does this, go to the upside, and then come back. We are still within this range. Price has room to correct between this lower low and this lower high. So we are still very much bearish, even if you see this. Because you will get caught where price will do something like this, go back up, something like this. You enter buys because you think this is an indication, and then price continues to go to the downside. And you're like, but this thing is not working, man. I lost money on this trade. I was looking to buy, but you were on the wrong side of the market. You took buys here and probably aim for the next swing point. You were on the wrong side of the market, and that's it. I hear you, bro. I'm sort of about the quality. Um, but in terms of everything that you've seen that is happening here, right? In terms of trading ICs on the first 15 minutes, it's still the same thing. The very same way you treat the higher time frame will still be the same thing you treat the smaller time frame. Remember, when you get indications, right? Indications they start from the 4 hour, the 1 hour, where you're gonna have indications in the 15 minutes. You can start from the daily still fine, but you most likely to find indications on these time frames. So the very same way you're gonna treat the 4 hour, treat the 15 minutes the same way, right? Because why are we taking these time frames? Even 15 minutes, 4 hour, you can drop down between 1 hour and 15 minutes. 1 hour, you can drop down between 30 or 15 minutes, 5 minutes. You get what I'm saying? 15, you can drop down between 5 and 1 or 3 minutes or 2 minutes, whatever the case may be. You can drop down to those time frames. Your your homework is to go and ensure that you study which works best. But overall, even if you trade price on the 15 minute, I highly advise you start from the 4 hour, understanding where you are on the 4 hour in terms of ICC, drop down to the 1 hour, understand where you are on the 1 hour in terms of ICC, also the trend, overall trend from the 4 hour, the 1 hour, and then you can drop to 15 minutes. I'll make you an example, right? I'll make an example. Let me make an example of what I'm talking about, right? Let's take gold, right? Let's take gold. Let's start with the 4 hour. I'm just gonna make you some quick analysis, right? Let's take gold. Let's take the 4 hour, right? So overall, we know that okay, price on the 4 hour. is on a continuation. Why? We are in this 4 hour range of this previous, this would be considered the higher low. We are on this 4 hour range because price was correcting the previous range, which was this high over here, right? And this higher low over here, right? So we know this price had made an indication before. Now price is correcting. And now we're looking to take price up where? To the upside. You know. Low equity. Sorry man, I thought they spoke about the quality, but my quality is low due to my PC is giving problems. I'm gonna be replacing it soon. But there's still a lot of things here, man. Either way, back to the charts. We know this on the 4 hour. This is where we are. You can delete them. There's no need for you to have this. You can delete them. I just normally keep them for people who, you know, for my students. You can delete this, right? So you want to drop down to the likes of 1 hour. If you prefer 2 hours, still fine. 1 hour and 2 hour most likely the same thing, right? You want to drop down to 1 hour, understand what's been happening. We saw this 4 hour to the downside, and then price making lower low, lower high, lower low, broke below, lower low, lower high, lower low, break below, lower high correction, right? Lower low, right? So we had a break to the downside, lower low, lower high, but then price didn't break to the downside. So now as comes our analysis. The previous lower high range that we were in and the lower low that we were in. We had price give us indication correct, but didn't break this high over here, right? Didn't break this high over here, right? So what does that mean, right? This means we're only gonna have a market structure shift if price breaks these previous lower highs. We're only gonna have a break of structure if price breaks these previous lower highs, not these ones. This is internal and is still part of this range as price is correcting. Price can still come and get to even to this level and sell to the downside because this is a bearish range. I'll try to check GBP web. So this is what I'm talking about. You get what I'm saying? So now we have price breaks above these lower highs, giving us an indication which ends up being a market structure shift, right? So now we delete this level because it's no longer valid. Now where the market structure shift happened, here's the nice part. Because we have a new indication to the upside. Where did the indication come from? It came from the lower low. Hence I deleted this previous lower low. It came from this lower low, 8 point price to the upside. So now the new range is between this lower high and this lower low. Price has room to correct within this range. You get what I'm saying? Price has room to correct within this range. Now that you understand that part, okay, what do? You want to see price correct and then price go back to the upside above the indication line. That's where you're going to be looking for trading opportunities. Looking to take price above these higher highs, create a new higher high, right? Above this indication, you want to see price can create a new higher high, right? So when you drop down to the likes of 15 minutes, you already have an idea of what the market is doing from the 1 hour. So you can look for a 15-minute range the very same way, right? So you can clearly see in the 15 minute we had price, price was going to the upside high, highs, high lows. Start to see price break below this, lower low, lower high. This is a 15-minute range. Price goes to the downside, goes back to correct. Look where the price corrects. This 15-minute range. So now lower low, lower high. on the 15 minute. It doesn't matter of all of these scrambles what were happening. We had an indication from the lower lows on the 15 minute. Price went up to correct and then corrected the 15 minute. Price came back. So the 15 minute, now you track in the 15 minute. What? New indication. Price goes back correct. This lower high also. Remember, we have this now, the new range. Price breaks below, gives a lower high breaks below this level also, the new range. You get what I'm saying? Right. So even with this 15 minute, you can actually trade it. Now we have a new break below an indication. What does price do? Price, instead of making the correction and continue, price instead it creates a higher high. We break above these lower highs. Same thing that happened on what? The 1 hour. Same thing's gonna happen on what? The 15 minute. I hope you're taking notes. Right. So same way, this lower low on the 15 minute led to the break of structure above this 15-minute lower highs. So we're no longer bearish, we are now bullish, right? Here, have that in mind, right? So, with that being said, price starts to get above the indication line. So, you can see higher high, higher low being made, higher high, higher low. Price still maintaining the higher lows, right? And price gets above the indication line on the 1 hour. So you have higher highs and higher lows being made on the 15 minute. As you can see, price did what? Came and corrected what? You see? Indication, correction where? The 15 minute higher highs. So even at this area, if you want to break it down even further, you can drop down to like 5 minutes, right? Five, if not five, 1 minute. Same thing price did on a higher time frame on the 1 hour and on the 15 minutes. It's gonna happen on the 5 minutes. We had a Magasar shift which led to a higher high on the 1 hour. We had a Magasar shift in the 1 15 minute which led to a higher high. And now what does price do on the 5 minute? We had a 15-minute indication above the what? The 1 hour indication line, right? So with that being said, what does the 5 minute do? Price is doing what? You can clearly see the 5 minute lower lows, lower highs. It's coming to correct the 50. Lower lows, lower highs. Right? Lower lows, lower. You can clearly track it also. You can clearly track it. Right? Lower low, lower high. Breakout. Lower high. Breakout. Right? Now we have these lower highs where price ends up giving us another market structure shift on the 15 minutes. On the 5 minutes actually, which is a continuation, and price has touched here, which shows a continuation on the 5. And if, just look at this, if you bought, let's say you're gonna buy from this area here, right? Because you're above the 1 hour indication and the 15-minute indication, right? And let's say you bought price above, because price was already making high highs and high lows, and you bought price at this area, stop loss below the high lows over here, and then you're looking to get your 1:3, which was going to be exactly at this level. Look at what price does. That's just based on the 15 minutes. But you cannot have this if you don't know what's happening on a higher time frame, the 1 hour, and if you don't know what's happening on the 4 hours. You get what I'm saying? That's how the range That's how you get to trade a 15 minute. You don't just jump on 15 minutes start making analysis, bro. You'll get hurt. You might get an indication and price goes looks like it's on a continuation. You jump on a trade and it reverses against you. You'll get hurt. You don't jump in. You start your top down analysis. If you prefer the 1 hour, use the 1 hour, but track it nicely. Just start it from the 4 hour. Understand where you are in 4 hour. We are on a continuation of the 4 hour. We bullish 4 hour, right? We bullish 4 hour. Now you want to drop down to 1 hour, right? Make your analysis on 1 hour. Understand where you are. Then you can drop down to 15 minutes. Those levels are just there to help you understand, so you can keep this thing in mind. For me, I won't need them. I won't need the 4 hour, but I'll just use it to reference where I am. You understand? I'll use it to reference where I am and then drop down to 15 minutes so I can also reference the 1 hour, and then I can drop down probably to 5 minutes if need be. So I can also reference still the same thing. See? Market shift, stop loss below. If I wanted to take price to probably these levels over here, it would have took some time, but it would have eventually got there. This is off a 5 minute trade, off of the 15-minute indication, which is above the 1 hour indication that we had here. 1 hour indication, price corrected. Now we are above the 1 hour indication. Price does what? 15-minute indication. And what does price do? Same thing. Ah, my man, this is how it gets. Right. This is how it gets. All right. This is on gold. Right. I'm gonna be. Somebody said GBP JPY. Let's see GBP JPY, bro. I don't know if which one you use, but I'm just gonna take the FCM one. All right. Same thing over and over and over and over and over. From the four, I wanna get probably a good look at it. But in most cases, when it comes to entry, when it comes to currency pairs, you wanna start from the daily, just to get a nice clear look of what's happening, right? Because you might miss something. But I can clearly see off the rip, I can clearly see price is making higher highs and higher lows, right? Higher highs are we bullish, right? So price break above, go to the upside, right? Came back to correct this levels over here. Higher high, higher low, right? But now, since price left this area, price has never came back to correct. And you can clearly see, like I always say, no matter how far long or how far the indication will go, price will come back. Price will definitely come back to correct that area, right? And as you can see, this higher low was able to hold price. Already I have an idea of where we are and what is happening, because price gave us an indication, price came back to correct, and now we are what? On a continuation. We are price came to correct, and we are currently on a continuation. You get what I'm saying? We are currently on a continuation. Already off the rip, I can clearly see that, right? I can drop down to 1 hour now, right? I can drop down to 1 hour. So just delete this. This one, these annotations, right? With that being said, I can clearly understand. Price, when it was coming to correct, it did something, right? Price did something, right? We have price making higher highs and higher lows, higher highs and lows, right to the upside, came back to correct this higher high, ended up creating a lower high, but then price broke to the downside, right? So we broke these lower highs, these higher lows. Price gave indication to the downside, price went down to correct. So you see now on the 1 hour, we are bearish. because the range on the 1 hour was this higher high and this lower high, this higher low actually. Not these, but these. Why? Price made an indication above this area to the upside, came back to correct, tried to push up. It didn't break above these highs. Instead, what did? It then broke these higher lows. So now the range is going to be between this where the breakout happened and where the breakout came from. Where price came from to get that breakout, to get that indication. So now we understand that on the 1 hour we are bearish. All of these moves, they have their own thing. They have whatever is happening on them. But off the rate in terms of the 15 minutes. If you want to break it down on like that, yeah, it's going to have its own thing happening. But you can clearly see price went up to correct, right? And now price might come back to this area or continue to go back up and even give us that continuation. But okay, on the 4 hour, we are above the 4 hour indication. But the price on the 1 hour is currently bearish. Bearish on the 1 hour, bullish on the 4 hour. Right. You want to get some sort of a correlation. It might be two time frames. In this case, we want to get the 15-minute on our side. For us to look for buying opportunities, we want to get 15-minute on our side, right? Look at this consolidation here. How many people do you think are trapped here? How many people do you think are trapped here? Try to understand whether the market is bullish or bearish. You get what I'm saying? Meanwhile, the market was bearish because price made an indication of downside. It is going to go correct. You get what I'm saying? A lot of people got caught here. Oh, but we're breaking to the downside. Let me look for sales. You sell it, it goes buy. Oh, market started shift, it sells. Oh, this it buys. Oh, this it sells. Oh, this it buys. Oh, this it sells. Oh, indication it buys. You're not seeing the bigger picture. Moral of the story, you don't see the bigger picture. Track your ranges. A range looks like this. Let me put it in simple terms. I don't know, in layman terms, right? Like I said, whether we're going up, price will do this, right? This is a range, right? This is a bullish range, and this is a bearish range. This is a bearish range. What makes these ranges? Let's say price broke from a previous high and went out to correct that high and then went up to the upside. Or let's say price broke up from the previous low and went up to correct this previous low and broke to the downside. So now this is a bullish range and this is a bearish range. And how will we determine the next range? On the bullish range, we want to see price come to correct these higher lows, maintaining this level without price breaking below, and then price to break the highs so that the range can now move to this new range. This then disappears. Now we have a new range. What after price breaks above, anything that will still be above here without breaking these high lows will still be bullish. Even if price comes do something like this, we still bullish, bro. As long as it's still within, we're still very much bullish. We're still very much bullish. You just want to see price do something crazy like price giving you a market start shift, correct that level, and then price probably going back to the upside. You can then use that, or probably on a smaller time frame, and look to take price to the upside, right? Similar thing, lower low, lower high, probably corrected to some lower low, right? Previous lower low, right? For this next one to get a range on the next one, yo, bro, for us to get a range on the next one, we need to see price correct without breaking the previous lower highs. Come and break this so the new range can move to this now. That will be the new range. Take it as a house, right? This house will only be broken if this roof is taken out. If this roof gets taken out, then this house is no longer a design. It gets taken out. This roof gets broken, right? Yeah, but I'm not sure if that landed. Yeah, that one was weak as hell, bro. That one, that's it. Yeah, yeah, it's gonna be saved on lives. It's gonna be saved on lives. Yeah, I'm not sure if this one landed, bro. For yeah, pretty much. You get what I'm saying, though. Pretty much that's what's happening. Pretty much that's what's happening, and you need to with that. That's when things start to get much clearer to you. That's how things start to get much clearer to you. You get what I'm saying? Because now, once you understand the range you are in, especially on a higher time frame, whatever model you're gonna be trading, it gets easier because you understand the range you are in. What is a bullish range or a bearish range? Now you understand. Okay, I have this price corrected this level and went up. You get what I'm saying? Price corrected this level and give us this high, low, and then price gave us an indication. What price coming to the downside to correct this level over here? Now things must get much easier for you to continue going to the upside. You get me? I hope you guys understand. I hope you guys understand, bro. Yeah, I hope you guys understand this thing, man. Regardless of whatever, regardless of whatever that is happening, you will definitely understand these ranges. No matter the time frame, no matter the time frame, even with these that are we seeing inside, right? They have their own ranges in terms of price going correct and continue, right? As long as the previous lower highs don't take it, the one that went to correct and ended up leading to an indication, the correction that ended up going to correct and then ended up leading to correction, that's a new range. That's a new range. The correction and the continuation that ended up leading to a new indication. Correction, continuation, indication. Probably take it as a C. Reverse the ICC. Yeah, I think that one will land. I think that one would land. Reverse ICC for a range. Range equal to reverse ICC, which is CCI. This is the new range. This is how a range actually is, because now it's no longer indication, correction, continuation. It will be correction, continuation, indication. That correction, where the correction came from, and ended, and then the continuation started, and then ended up leading into the indication. That's the correction and the continuation would be your new range. I think that one lands. Yeah, that one would definitely land. Correction, continuation, indication. That's what you want to see. And then your correction and continuation would be your range, right? Correction, continuation, indication. So remember, correction and the continuation will be your range. Does it make sense? Does it make sense, guys? Talk to me. Does it make sense? Does it make sense, guys? Does it make sense? I hope this does make sense. Range equals to reverse ICC, which is CCI. Yeah. So that's how you can get to be able to understand some, especially now when you're looking for long term in executions, right? So let's take this Japanese yen, yeah, right? We know that the 4 hour is bullish. We know the 1 hour is bearish, right? So with that being said, for us to get into a trade, you need to see some sort of a market structure shift, right? We can clearly see price made this, some of this lead, it broke from here, went down to the upside, right? But obviously, we cannot trade the 4 hour, nor can we trade the 1 hour. We can't just place a trade on the 1 hour and then sell blindly, right? What you want to see, we can do, we can drop down to 15 minutes. So we can look for execution lines and be able to execute, right? So we get to this level where price ends up making higher highs and higher lows, right? Whether you're going to be taking this one over here where price end up leaving this area, price to come and correct this area, probably get a 1:1. That's all up to you. But price gave an indication off of that, came to correct also the 1 hour. Price broke, instead of price continue to go to the upside, price breaks these higher lows. So the new range becomes these higher highs. So now the 1 hour and the 15 minute, they're in correlation. You have the new range on the 15. Price given indication, you expect price to do what? To go back and correct. And as soon as price breaks below this level, what do? You can sell. You can go to likes of 5 minutes to look for entries or opportunities below this area, or but whatever works best for you. If that's how you'll be tracking ranges, but even if you would have taken it as it comes, right? Price makes higher highs and higher, whatever it does, and then from the to the breakout that ends up happening from the correction and then price on a continuation on the 1 hour, you can clearly see price making lower lows and lower highs. Right? Price makes a lower low, go back and create a lower high. It doesn't break above. So that would mean the sellers now are in doesn't break above this lower high. So we have this range also on some internal range of the 15 minutes that was happening. We have this also happening over there, right? So you can easily be like, okay, price went to correct. I want to see price come in, break below this area. If you don't trust it, you can even take it much further. Then I'll be like, okay, I want to see price give me a lower high. And then at the lower low of this area, I'm going to be looking to take sells. And then you can even aim for this area which was not corrected when price was shooting to the upside, or even this internal one, because this was also not corrected. And as you can see, price came for it. Like I always say, price will definitely always come back to correct. No matter the bro, no matter time frame, price will always come back to correct. If it doesn't correct it, it breaks. If it doesn't correct, it breaks. So now going back to our 1 hour, let's see. The 1 hour was bearish, the 4 hour was bullish, but price went down to correct the 1 hour, broke below that level using what? Lower lows and lower highs. Lower low, lower highs. There you have it. There's no need for you to take the whole move to the downside, man. That doesn't seem that's the thing. That's the thing. Especially you guys with low equity, my man. My man. You guys with low equity. Hey, stop that thing, man. You wanna get it? 1:5, 1:4, 1:10. Won $10, $20, my man. Stop doing it. Stop doing it. Stop doing it, bro. Take 1:1. Take 1:1. I showed you how 1:1 works. Take 1:1. Risk the whole account. Make $10 here. Wait for the next setup. Remember, right? Next for the next setup. Remember, we're taking ranges now, right? You're gonna be taking ranges based off this, the 15-minute one, right? Price this is what gives you an indication below, right? Gives an indication below. You want to see, remember the next range is between this lower high and this. You want to see price correct within this without breaking the lower highs. Anything below you can sell again, right? You get the very same 1:1. Now you're from the $10 you made $10, $20. Now the $20 you made $20, $40. Now you're gonna risk the $40 to make what? $40, $80. Now you're gonna risk 80 to make what? $80, $160. Now you're gonna risk 160 to make 160, $320. 5 trades. That's all you need. 1:1. You have $320. Now you can withdraw 220, start risking $100 on a 1:1. Having a trading plan is very, 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 very important. You don't need to chase the whole move. You just need to get what you need, get out of the market. Doesn't matter how enticing it looks, bro. I know this indication that's a lot of pips. That's a lot of pips. For you to get a 1:1 there, my man, you're gonna be fighting with your brain. You're gonna be fighting with your needs at that moment in time. Now that's where gamblers and people who actually take calculated risk differs. You get what I'm saying? So you don't want to be doing none of that. You don't want to be doing none of those things. You want to be coming into trading with a full-on plan. You're gonna be taking a 1:1. My man, this thing works like butter. Like 1:1 works like magic every single time. As long as you have analysis made on that, no matter the pair, no matter the pair. If you have analysis made, we had this analysis made also. Indication correction. I don't know. Yeah, I don't know if the guy is here. I was showing him why he got tapped out yesterday. We had the 4 hours in control. We had the 1 hour in control. We had the 15 minutes in control. The correlation between the 1 hour, and the 15 minutes. Do you understand how powerful is that? And this trade actually ended up going to a 1:3 because it was a market structure correlation which is what we actually aim for in the mathematical correlation, 1 is to 3. This one, same thing, 1 is to 3, but all of this was based off a psi model, and it's something that is hardly does, but yeah, it went there because we were aiming for these highs over here on the 4 hour, because we were on a continuation. The 1 hour was making high highs and high lows above the indication of the 4 hour, doing the same thing, high highs and high lows. Also the 1 hour high highs and high lows. Also the 15-minute high highs and high lows. We had a backstart shift on the 4 hour. We had a backstart shift on the 1 hour. We had a backstart shift on the 15-minute. All doing the same thing. I don't know what to call this process, but this process goes like a ripple effect. This process goes like a ripple effect. I don't know what to call it. I want to call it something. Give me ideas. Give me ideas, guys. I don't know what to call this process. So we have this over here, and then we're gonna have probably something like this, you know, and then we're gonna have something like this. It is very bad. I don't know if you guys can see this, but this is how the process explains itself. This is how I can best explain it. Price would do this on a higher time frame. It could go do the same thing on a smaller, on the internal structure, and it would go do the same thing on the smaller time frame. Replica marks shift from a lower high and a lower low. Price gives you a higher high. Price comes in correct, gives you from a lower high and a lower low on the 1 hour. Price gives you a higher high, higher high, higher low, higher high, higher low. Okay, 4 hour higher high, 4 hour higher low, 1 hour higher high, 1 hour higher low from the lower highs that price was correcting with. Okay, now price is doing the higher highs and the higher lows. What does price do on the 15-minute? 15-minute price is doing what? From a lower high and a lower low, price is giving higher highs and a higher low. So this is the best way I can explain this process. 4 hours. I think I'm onto something here, man. This is powerful. This is powerful. This is very powerful. I'm onto something here with this demonstration that these annotations I'm doing here. This is very powerful. I think this is how we can actually ensure your maximum potential. Sorry guys, my sinuses are acting up. All right. So 4 hour internal structure, bigger time frame, internal structure, smaller time frame. And it even goes worse. It goes to 5 minutes. It goes to 1 minute. But I just need you to memorize this. Ensure this. Ensure this. Ensure this happens. The 1 hour, what the 1 hour, I mean the 4 hour, what the 4 hour is doing on a higher time frame. Ensure that it happens also on the 1 hour, and ensure it also it happens on the. This is the market structure correlation. Lo and behold, the market structure correlation MSC concept. Lo and behold, the market structure correlation concept. So this has been a good session, guys. This has been a good session. I hope you guys were able to take something from this session. I hope you guys were able to take something from this session. You see here we had a Magasan shift. Price did this. Here we had a break of structure now in the 4 hour. This is a break of structure now. Price gave us a new indication. Price will do the same thing when it comes to correct. Price has room to correct between this high and this higher low. So now the new range changes. The new range changes. The new range changes now. Right? The new range changes. Here's the new range on Bitcoin. Higher high, higher low, higher high. So when price comes and corrects, it has room to correct between this high and this low for correction, and then price to go to the upside. Break of structure. Love it, guys. Love it, hate it. I don't know. This is game right there. What I just shown you guys. This is game. This is game. This is game. Alright, guys. This brings us to the end of today's Q&A session. You can go rewatch this as many times as you want. Don't forget what I did speak about. If you want to get more of these things, the trading plan, the psychology, as the time frames and everything, understanding ICC from scratch. This is not a course. I'm not selling a course. I'm selling mentorship. Please. That's what the Hasu University is all about. This is the we have live sessions every single day, by the way. Yeah, we did our London, our live in New York session with everyone. We did our London session also, yeah, today. So we have notes, what to look for. We have lessons, and I'm gonna be adding more concepts, just like the Asian range concept. There's a video. The first live that we did was on that, and then um the the second one live that we did, I would say probably, is it the second one? Probably the third one. Probably this is like the fourth, but I think the third one. Yeah, we did the liquidity grab, but in terms of market structure and how to identify potential or high value, liquidity sweeps, liquidity grabs, and whatever concept about clicks with you, man. I'm always ready to help you guys. Whether you want to join the mentorship, whether you don't want to, that's on you. Probably still not a problem. I mean, I do help people in the free community, right? If you look at the free community, this is the trade that our this Bitcoin trade that I was telling you about. So we did discuss it last night with I did discuss it last night with this gentleman over here. I did discuss it with him. As you can see, yeah, we did a breakdown. I did do the breakdown on Discord. We used the Discord. Yeah, it was very late for me. As you can see, it was 12 midnight. But I was telling her, "Are you up? I can do a breakdown for you." So we did a breakdown because you wanted to confirm the bias and how did he make a mistake, just to understand, so that's how I was able to show him what, I just deleted, how his mistakes, all of these things. That's how I was able to show him all of these things that you now see here. You get what I'm saying? So yeah, guys, thank you very much. Please comment the hustle. I wanna share, comment the hustle, hashtag the, or just say the hustle. Yeah, the hustle university, the hustle university. Put some flames emojis next to it. I'm just gonna be taking this for my story. Yeah, the hustle university, guys, the hustle university. Can you do that for me? Please comment the hustle university. I'm just gonna take this for my story on Instagram. I barely use social media, man. I really hate the social media. I barely use it. The validation from people, actually, that was my first downfall. So that's why I'm not antisocial. I just don't. I prefer face-to-face interactions rather than over the phone calls. I hate calls, by the way. But yeah, guys, talk to me. Please comment the Hasi University, the Hasi University, the Hasi University. Please comment, guys. Mm, on the left chat, on the left chat, here on the left chat. Oh, thank you, prof. Thank you very much. Thank you, everyone. Um, thank you very much. Yes. Thank you very much for attending this question and answers live on YouTube. And thank you for your support. Thank you for subscribing. Yeah, thank you, guys. Thank you for watching. Have a wonderful and blessed day or evening, you know. Yeah, our aim is to ensure that, we all make the best. Man. Thank you, sir. Thank you. All right. All right, guys. That brings us to the end of today's session. And yeah, bye. Bye, guys.